Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up. It is December 7th, and kind of wrapping up the week here. Going into today's trade, we're looking at corn about a penny and a quarter lower, and then beans up about 50 cents. And end of the day, we're looking at corn down about 14 cents and beans off by 14.15 as well. When you look at the corn market, you look at a couple things that have supported the corn market over the past couple weeks, and that's just your technicals. Our export demand for corn is not there at all. That was evident overnight when Taiwan went in and bought Brazilian corn, which was 25 bucks a ton cheaper than U.S. corn. So it was the technicals that were supporting it, and we were looking at the 50-day or 20-day coming in there around that 45, 47 area in corn, and as that was given today, we saw people exiting their long positions. So corn, we saw them 745 was our 20-day moving average, 748 was our 50-day moving averages. Both of those going out led to weakness out there. The buying of South American corn over U.S. corn led to weakness as well. So you've got poor fundamentals on corn right now, and you have poor technicals on corn. So look for that to be kind of the weaker link out of the grains. You want to keep an eye on wheat, though. Wheat is a possibility that could pull up that corn market down the road. Next week on Tuesday, we will get a quarterly stocks, or not quarterly stocks report, but our monthly stocks report. Not a whole lot is expected other than possibly a lowering in exports due to the situation that is going on right now. Over in beans, a little different scenario. Beans made it through their 50-day moving average in the January beans this week, and we did see solid export numbers for beans as well. So you've both got the fundamental reasons and the technical reasons to be long beans right now, as well as in the products. Soybean oil crossed over their 50-day moving average as well, and closed above that for the week. So that's definitely positive. And then when you look at meal, we traded back and forth around that moving average, but we also saw some significant sales this week too. So fundamental technicals are supporting the beans. We're going to have the USDA report on Tuesday of next week, and we're looking at the USDA to increase our bean demand number. Probably not mess with the yield or the acres or anything like that, but maybe see a little boost in demand. Go from a 140 carryout to probably around a 130 carryout. When you look at what has happened so far, with 9 weeks only having been marketed this year, we're exceeding what we're expecting to sell in the way of bean oil. We're slightly lower than what we're expecting to sell in meal, but can be taken up pretty quick. And in the beans, I think it's 200,000 tons we just need per week to meet the USDA estimates. So we're very close to that USDA number, and would in all likelihood have to raise it. So once again, the bean crop getting a little bit smaller. You look at the JM beans and where they're trading at, and like I said, we passed over the 50-day moving average. We're probably 1466 to a 1496 range between your 50-day and 100-day moving averages, 200-day and 50-day moving averages. So kind of keep those areas in sight. South American weather, yes, they're looking at it. Argentina, a little bit on the wet side, but that's improving. Southern Brazil, a little bit on the dry side, but expecting rain. So actually not a big weather situation out of South America right now. And that probably won't be prominent until about third, fourth week of December, when the growing really is starting. Today on the outsides, we saw unemployment. Traders were expecting 90,000 on the non-farm payrolls, came in at 146,000. which was definitely better than expected, and the unemployment rate dropped from 8% down to 7.7%. That was a big boost to the equity markets at 7:30 when it came out, and then it was doused at about 8:55 when the consumer confidence number came out. And our consumer confidence, or as it was read today, the Michigan Sentiment Index, dropped to its lowest level, or had its largest drop that we've seen since March of 2011. And that just goes to tell you that, everybody's hearing about the physical cliff, everybody's hearing Congress bickering about the physical cliff, and day traders are trading off of the responses on the physical cliff. One clue, and it was summed up pretty good today, was if you have a dual press conference between the president and Bonner, then you're going to probably have some positive news, but if they're separate news conferences, then there's probably no progress. So you can utilize that in your day trading. Another thing that kind of weighed on the euro currency, boosted up our dollar index, is the lower estimates out of the Bundesbank. They came out today and they were talking about reducing next year's growth from 1.6% to 0.5%, and you got to remember that Germany is the driving force over there in Europe, and when they start to slide, they could really take down, or it's dire straits over there. So having heard that their estimates for growth were really coming off, that put a negative feel on the euro currency. That rallied our dollar by about 30 cents, and that also kind of came into the equation because that makes commodities a little bit more expensive. Hogs were down today, and cattle were off a little bit today. Cattle are still waiting on some significant cash trade, and by 2 o'clock here today, we hadn't seen any yet. Whereas the pork, they had about a 6-day rally in the cash market, where you were able to bring that lean hog index up to about 85. But now we're starting to come off on the cash price, so I'd imagine we'll start coming off on that hog index as well. Also, demand is starting to dry up. The holiday demand has come and went, so we're seeing a little bit of correction in that hog market. So that's kind of a sum up of this, a summary of the week. If you have any questions about stuff that's discussed here, or about hedging strategies, please give us a call here. BIS Commodities, 1-800-373-2525, and have a great weekend.